this is our series Hear From Her, and we're very pleased to have Nupur Joshi from REITAS joining us today. She's the CEO of REITAS since 2017. And Nupur, anything that you want to share with the audience about yourself?
Yeah, hi, Selena, and thanks so much for inviting me to this podcast. It's quite thrilling and quite an honor, really. So maybe I can just start off to set the tone about what is REITAS, who we are, and what we do. REITAS is short for REIT Association of Singapore. We are the industry body that represents Singapore-listed REITs. Almost all the REITs listed here are our members, and also our members are the key players in the REIT ecosystem. So the bankers, lawyers, trustees, consultants, and so forth. So we've been around since 2013. In fact, we're celebrating our 10th anniversary this year. So last year, we celebrated 21 years of the S-REIT industry, of the Singapore REIT industry. And this year, we're celebrating our association's 10th anniversary. Quite apt that, on this 10th anniversary here, sustainability issues have kind of become quite important for us and for our members.
So maybe going on this, why and when did REITAS actually decide to embark on this journey to educate members about sustainability?
Yeah, actually, it started a few years ago. I think the first sustainability theme kind of training session we did was in 2021. And that was the impetus for that was that MAS came out with these environment risk management guidelines for financial institutions, and REIT managers are considered a part of the financial institution category. So, that's when we kind of, as an industry, a little bit woke up to that. Of course, we are always mindful about buy properties which are, not in a flood zone or so forth. But I think the environment risk management guidelines really was the starting point of us paying serious attention in this area. And subsequent to that, of course, there's been a slew of regulations. So I would say regulations was the impetus. But of course, as we learn more, now we understand that regulations were there just to get us started. And so now we're actually in the whole industry is in the process of kind of operationalizing all the different aspects of sustainability. Yeah. And having said that, REITs being listed companies have been issuing sustainability reports since 2017, which is when SGX made it mandatory. So the idea was there, but certainly over the last 2 years, especially through COVID, we realized that this is something which is very important and where there is a knowledge gap between what we know in our industry and what areas we are expected to focus on, because we are in REITs, which are really a combination of real estate and finance. So a lot of people essentially who are working in REITs are either real estate trained or finance trained. And then so we realized that we need to kind of do more on the sustainability. First, we all need to understand better, understand more. And so that's when we thought that as an association, this is where we can step in and kind of raise everyone's knowledge and understanding of sustainability matters.
Very powerful combination, real estate and finance. So as you correctly mentioned, the REIT industry is a very key pillar of Singapore's capital markets, total market cap of around 100 billion Singapore dollars. So do you see investors starting to demand for green REITs?
Certainly. So when we think about investors, there are different categories of investors. So there are institutional investors, high net worth investors, retail investors. And the amount of focus each category is giving is a little bit different. Of course, within each category also there are differences. But broadly speaking, the charge has been led by institutional investors, particularly the large ones, who themselves are, they may be signatories to the PRI, the Principles of Responsible Investing. And so they need to also ensure that their investee companies following certain sustainability pathways and so forth. So I would say institutional investors are the ones who are the most focused on this area and ask the most questions. High net worth and retail investors a little bit less so. It could partly be because, of course, we've been going through very challenging macro times, economic times over the last COVID and then the high interest rate environment. So it could be because of that, retail and high net worth investors tend to focus more on still the immediate quantitative financial returns as opposed to medium to longer term sustainability issues. Whereas institutional investors often have pension fund money, they have to think long term. So I think because of that different requirements and levels of understanding of sustainability issues, we do see that not everyone is in the same bucket. But I think we do believe that over time, everyone is catch up because, as you know, the whole world is playing catch up now to what should have probably been done a few decades ago, right? Getting on top of all these sustainability and climate issues.
I hear you. So basically, institutional lead the retail investors in terms of the demand for green REITs. But is there a difference between foreign or local investors on this front?
More coming from the European investors, some of the big US investors, possibly some Australian investors. The Asian institutional investors, a little bit less so, but catching up. So there is a difference. I mean, it's quite understandable. Europe has been leading the charge on all sustainability and climate-related matters for many, many years now. Their level of understanding and sophistication and the degree to which sustainability issues are integrated into their own investment analysis process is much more sophisticated. Those of our REITs who have some of these big European or US institutional investors, as they do see more questions coming from them.
So I understand that REITAS and EY recently published an in-depth study that analyzes the progress made by Singapore REITs on climate risk disclosures. Can you share with us some of the key insights about what Singapore REITs are doing well in and some of the gaps that they need to do better?
Yeah, sure. So the report was actually, yes, initiated by us because we thought that since climate reporting is being made mandatory as an industry, we should try to understand where we stand, where all our REITs stand in terms of their quality and coverage of their reporting, and where are the gaps. So just as a background, SGX kind of made the climate reporting mandatory on a comply and explain basis from FY 2022, and even MAF, as I mentioned earlier, for financial institutions required some climate reporting as part of their environment risk management guidelines from June 2022. So a little bit the background or the foundation had already been laid, but FY 2022 was really the first year from SGX perspective that REITs as listed companies were expected to do climate reporting, again on a comply or explain. So that's why we thought it was the right time to do it. The good news was that, of course, when we asked EY to do the report, we didn't quite what they would find, right? So we were kind of prepared for whatever result they came up with. But we were actually quite heartened by their findings. I think number one, 100% of REITs have started climate-related disclosures. So as I said, partly it's because the foundation had been laid by environment risk management guidelines. But still, it's quite credible that everyone, all our REITs, we have for doing climate-related disclosures. And out of that, 55% initiated their climate-related disclosures in FY 2022. So that gives an idea of how recent this whole climate disclosure trend is. So 55% started in FY 22, which means that the balance 45% started at some point prior to that. And there are the industry leaders who started many, many, many years prior to that. So we do have an industry, like I guess with like any industry, where the different players are at different levels of reporting maturity, but the good news is that we're all doing it now. The other finding was that on average, Singapore REITs on average perform better in terms of climate-related disclosures as compared to their global real estate sector peers, which actually was a really pleasant finding when we read it, because at least it made us feel that Singapore REITs are doing well. We compare very well with our global peers. We are performing better. The TCFD framework is divided into 4 pillars. There's the governance pillar, risk management, strategy, and metrics and targets. So in 2 of the pillars, we are actually very strong. The governance pillar in particular is the strongest for Singapore REITs, both in terms of the coverage and the quality. So we're talking about the governance around climate-related risks and opportunities. And the risk management pillar is also quite strong, and that refers to how an organization identifies, assesses, and manages climate-related risk. So, it's a pretty good report card, given the fact that more than half of our REITs just put out their first TCFD report for FY 2022. So that's on the positive side. Of course, it's a new thing, and there's always a lot of room for improvement. So some of the areas highlighted was, number one, the pillar that was the weakest was metrics and targets. So when we say metrics, we are really referring to the quantitative measures that are used to assess a company's exposure to climate-related risk. So the metrics and targets pillar was a bit weak, and it was weaker than global peers. So for, the numbers were 37% was the report that we got for our REITs, whereas globally it was 43%. So, but in some ways it's also understandable, because to have metrics, you need data. And to have data, you need an organized data management system in place to collect all these kind of environment or climate related data, or even waste related water usage. So this is not something that typically a REIT manager would have been organizing just over the years. So it's a new area, which is why in the initial years, we started off doing more of a qualitative disclosure, more and a little bit not that much quantitative, because of this gap in data. So that was one of the areas highlighted, and obviously it's an area that as an industry, and in each REIT in particular will work towards. Then targets refers to the specific measurable goals set by a company or a REIT to address climate-related risks and opportunities, or risks and to capitalize on the climate-related opportunities. So again, quite logically, if the metrics are not fully there because quantitatively the data is not there, then it's obviously difficult to set quantitative targets, because that's like step 2. So again, that was highlighted in the EY report, that's something we need to work on, like set more measurable goals. When I say set more, there are obviously REITs and property groups who have announced and are already there and they have set their goals, but we're talking about industry as a whole. There are many who had not set these kind of metrics and targets in a robust quantitative way. The other area which was of improvement that was highlighted was around the disclosure of scope 3 emissions. So again, so scope 3 are, refers to the indirect emissions like greenhouse gas emissions that are associated with the company's activities, but not directly controlled by the company, right? So for example, the energy that a tenant would be using in a building would be a scope 3 emission. This is, again, in a way, not surprising. It's very, very difficult to obtain scope 3, this kind of data. Again, something that we are all working towards, trying to see how we can kind of obtain this data on a consistent basis from our various downstream stakeholders. The other area of improvement highlighted was in terms of setting of the final and interim targets. I guess that's in a way kind of related to the target setting. I think once the data is in, then the target setting process can begin in more seriousness. So that's another area that we need to focus on. So I would say by and large, it's a reasonably decent report card given the fact that it's our first year. And it's a very useful report because now we know exactly where the gaps are, and the report comes out with some recommendations of we're going to work through this as an association, run more workshops and seminars and training sessions, so that hopefully the next time the report is done, and there is a plan to do a rerun after maybe next year or the year after, so that can see how far we've improved. So we do hope that as an industry, we move consistently over the years.
Yeah, definitely looking forward to seeing the next report, actually. So just to get your sense, in terms of Singapore's regulatory stance in making climate disclosures mandatory, does actually change the way they think about property investments?
Certainly they have. I mean, now not just a disclosure item, right? It started off as a compliance regulatory item, but now it's becoming operationalized, right? So I think one of the first few areas where we saw that happening was you would see companies, REITs, they would start putting out some language or some targets around increasing the percentage of green certified buildings. So I think, that's one thing we have some control over. So, how can we, we already had, each REIT would have some in their portfolio typically, and then how to go about increase. So that's where, from an investment perspective also, if REITs are going out there to acquire new properties, then the greenness of that building becomes a pretty important criteria now, much, much more so than it was in the past. So that's how, from an investment perspective or from a redevelopment perspective, REITs in general don't do a lot of development work because of regulatory limits around it, but we do some. And so whenever there's a redevelopment or an asset enhancement opportunity, of which asset enhancement is more common, then we use that as an opportunity to kind of increase the resource efficiency of that building, essentially make it greener, use it as an opportunity to get some green certified labels. We'll see also that all this also plays an important part in getting a good GRESB. So GRESB is the real estate it's the benchmark for sustainability issues for real estate. You can see it's getting operationalized. It's not just senior management, or it's not just the sustainability office that is thinking about these things. It's other departments as well. I mean, take another example, the asset management function, department. I mean, for them, if we need to get data from our tenants, for example, on the use of their electricity, then the asset managers need to be on the forefront of those conversations. So then they become important. Or think of our property management folks. If we need to make our energy use more efficient or manage our waste in a better way, the property management folks become more important. If we take risk management, integrating climate considerations into the overall risk management framework. So every department in a REIT manager has some role to play, and that's the stage we are in. It's really about everyone understanding, everyone irrespective of what role they do, because certainly they will have a role, and how they can play their part in this whole sustainability movement.
Yeah, so the whole DNA will be turned green,
absolutely.
actually. So in terms of the larger REITs, because they have parent companies or sponsors who themselves are focused on becoming more sustainable. So it seems that the larger REITs will actually benefit from scale and expertise from the sponsors. So what are you seeing in terms of the smaller and mid-sized REITs? Are they also catching up?
Yeah, so that your statement is generally true. I mean, it's true across everything. Scale is obviously very helpful, and in looking at sustainability issues, it's also quite helpful because then they can do it. Those who belong to REITs, which belong to a bigger group, can organize the sustainability teams at the group level and then cascade things down to the REIT level. But having said that, there are mid-cap and smaller cap REITs who have understood that this is an important area, which actually affects their competitiveness. Looking through that lens, it put in more effort on sustainability front, and then of course, there are others who are so busy kind of managing or doing things the way they've always been doing that it takes a bit of time for them to change their DNA. So different REITs at different levels. And I think that's where we as an association come in, because we want at least the base level to move up significantly on all sustainability matters. So they're obviously the ones who are the leaders, they're understanding at a much higher level. And then we use their expertise to come and we request them, please come and be an instructor for our training program so that others can also benefit from what you have learned in your maybe 5-10 year long journey. And I would say, it's very heartening that the spirit of sharing knowledge and lessons learned is actually very alive and well in our industry. There's a lot of sharing and learning that happens through our REITAS platform. And it's an efficient way for those who haven't yet or who are still in the early stages to kind of not repeat the mistakes made by the more advanced ones, because then they will just say, hey, next time you do this, please don't look at this, because it's not, don't waste your time with this. So it does help a lot. So that's one part of it, our training sessions where we are trying to, where we get our more experienced members to share with those early on in the journey. The other thing that we've done is we have very recently, just a few months ago, in fact, established a sustainability task force. So this comprises of a team of people who, from amongst our industry, who understand sustainability issues and who understand REITs. So that's important because we need people who understand both, so that we can really figure out what are the more nuanced issues around operationalizing some of these things. So we have a task force now, and we are all putting our brains together. We've established work streams so that we can focus on different aspects, because sustainability is a very big thing, from regulations and compliance to policies to stakeholder engagement to sustainable finance. There's many things inside there. So we are trying to be very systematic and structured about it. Yeah, and we hope that with these efforts, the whole industry will kind of move along on this pathway faster than they would have done without our contributions. So that's the idea.
So it's very encouraging to hear about the partnership and the ecosystem and all the stakeholders basically working together. So maybe my final question really would be, is there anything else that you would like to see from any of the stakeholders in this relationship that could step up further?
I think now what we are trying to do is basically expand our network, so to speak. So far, I would say a lot of the sustainability related efforts have been kind of, for the most part, by members, for members. It's just sharing. But now what we want to do is really, we want to tap on the expertise of professionals who may not necessarily be in the REIT or real estate space, but whose ideas and wisdom we can take in, because as I said, sustainability is such a wide area. If we just keep talking to each other, we won't get very far. So that's the next stage where we want to really reach out to more and more people who are in this field so that we can all cross-pollinate ideas, that we can all move faster together.
Well, definitely. I think the idea is that we all work together and move faster together.
Yeah.
Thank you, Nupur, for this very interesting insights. And again, we wish you all the best in terms of the REITAS efforts to move the needle as far as sustainability issues are concerned. Thank you.
Thank you so much, Selena.